is the message. Sanjay Khanna joins us, Executive Director, and he's in charge of the refinery business for BPCL. Mr. Khanna, good morning. Thank you for joining us. It's the first time I'm interacting with you on ET now, so very warm welcome. Welcome to the show.
Thank you
I'll
very
start
much.
with a very basic big picture, sir, which is that in the last couple of months, we've seen an extraordinary surge in energy cost. We've seen a massive supply crunch, and we've seen a massive uptick coming back in the petrochemical demand and the refining demand. How would you summarize the big picture for us? What is the reality? Do you think the one-time spikes and adjustments, what we saw in October and early December, are they behind us?
As you know, that petrochemical market is having these type of surges happen. It's a very normal trend. So we believe that due to some unit going down in China, these type of surges were there, but now slowly it is settling.
Are there ESG challenges which are currently there for the refiners and for refineries also? Because when we speak to metal companies, coal companies, they are telling us that we are getting more and more conscious about ESG and environment, and as a result, no new capacity will kick in, and the existing players are the ones who will enjoy pricing power. Is that the situation for BPCL refining business?
Definitely due to cracks being lower, and there was a supply from the gas side also got affected. There was a tremendous pressure on refineries, and we had to put a lot of effort towards the reduction of the operating costs, mainly in the field of energy, which we are working on continuous basis, so that these type of challenges can be faced and we can our operation remains on the sustainable basis. So right now our main focus is there. Yes, we have to expedite our journey towards the petrochemical, one. Number two, we have to work towards the reduction in our operating expenditure. As I said, mainly our focus will be on the energy reduction, which we are working in a highly proactive way.
The crack margins are headed. What is the picture like on a blended basis for this quarter, and where they are headed in next couple of months?
The way the present situation and the coming next quarter, we are finding, at least for refinery, it will be very good period, I must say. After lull of H1, I feel that H2 belongs to refineries, and definitely whatever we have lost, we would like to make it up in H2.
Good morning, Mr. Khanna. The GRMs, are they at all under threat with the way of the volatility of crude prices? On top of that, it's a double whammy with the rupee's depreciation as well.
Ma'am, we see forward to at least till February or mid of March, the situation. The forecasting indicates that cracks are going to be healthier, the demand will be good, and with the reduction in the COVID cases, we feel that we are more likely to the normal situation. So that is how we are expecting that at least for last quarter, we are expecting the situation for the oil companies will be promising. And initially we had threat of Omicron, but now even that is also not a huge challenge. So as of now, we see that the forecasting for the future indicates that H2 will be brighter.
And so, just the way the companies work, you have enough inventory of crude already, I would imagine, to be safeguarded from the volatility that we've seen in crude oil prices globally, the way they have risen. And of course, the way the US dollar has also been strengthening, that doesn't augur well typically for the Indian oil and gas market.
Yes, I must say that our crude supply and the prices are, in the present situation, I must say that they are much stable at this juncture, and we are not forecasting any big threat due to price volatility of crude.
Okay. If I look at your counterpart, IOC, they are looking at using their fuel network to create more stations for electric vehicles. How are you planning to use your distribution network? What are the other things which you are likely to add? What are your plans to move into EV?
Yeah, good question. Actually, initially EV was posed as a threat to oil companies, but now as we are transforming our petrol station to energy station, wherein when the customer will come, that depending upon the requirement, depending upon the need, we will be able to cater to all type of customers. So be it conventional fuel like petrol or diesel or CNG or EV, all solution will be available to them. In fact, we are having more bigger plan to convert this our fuel station for future. So there are much in store for customer at this petrol station.
Is it too early to start thinking that EVs will take over, diesel prices, diesel demand will come down, fuel prices will come down, it is time to go easy on refinery capex? Has that thought started kicking in already when you discuss future capex plan for refineries?
I must say that EV is, yes, EV is going up in a big way. But whether it is a real threat to diesel, whether it is real threat to powerful vehicle, answer is no at the juncture, number one. But having said that, we have to ensure that our cost of the production should be well within limit, and that is what we are working it right now. And so that one way of sustain business is that I have to become leaner, I have to reduce my operating expenditure. That is our line of thinking. That is on one side. Second side, we know that when I have to move from crude to fossil fuel to petrochemical, and as it was announced by our chairman, that we are planning to go in a big way in field of petrochemical. So in next 3 to 5 years, we have planned almost 50 to 60,000 crore investment in the field of petrochemical. We are not having any expansion plan because 3 of our refinery at Kochi, Mumbai and Bina are adequate, capacity is adequate enough to cater to the future requirement.
Given that BPCL is going through what could be called as is on the divestment drive, do you see big changes happening on your capital allocation policy? You've given a fair dividend out last year because of a one-time sale of Numaligarh. But if I look at your counterparts like HPCL, the kind of buyback policy they are following, the kind of dividends they are giving out, do you see that being followed at BPCL also?
I must say that we are going for any investment plan based on the merit of it, and whether it is divested or not divested, because of merit of the project, it will sustain time test. So we don't see any threat because of divestment. Any change in our expansion project will the progress of the expansion project will get hampered. Did I answer
Khanna,
your
before we
question?
let you go, now whether there is disinvestment or no disinvestment, yes, Mr. Khanna, thank you so much for answering it. Now, whether there is disinvestment or no disinvestment, a new buyer coming in, just the way the world is moving, we'll be looking at the ESG scorecard of BPCL and the way the company is moving. The chairman recently, of course, has talked about how there will be a roadmap for green hydrogen by March 31st. If I'm not mistaken, there's a government proposal which talks about refiners like you needing to have 10% of green hydrogen capacity in the first 3 years. Are you on track for all of that?
That BPCL has signed an agreement with the BARC, and BARC has already successfully demonstrated the lab scale indigenous green hydrogen electrolyzer. It is the first of its kind in the country, and we have joined together to scale it up to the higher level. And we have kept a timeline of 2022 for the demonstration. So that is our plan for green hydrogen. And yes, we are aligned with the government plan, and we will be going for the 10% consumption in next 3 years.
That's BPCL for you, ladies and gentlemen. Mr. Khanna, it's the first time you've come here, so thank you so much for your time. We look forward to many more interviews. Here's wishing you and the entire BPCL family a very happy new year.
Thank you very much.